There are a million ways to make $1 million. In this video, we're looking at one of them. And the main character in this video is the legendary Warren Buffett, who made his fortune of over $104 billion by investing in the stock market. And after decades of being successful, this is how you make money according to him.
I bought my first stock in the spring of 1942. I was 11.
So there's a reason why Warren Buffett repeats this in almost every interview he does. It's simply powerful. Investing as early as possible will put you ahead of 97% of people out there. And this is possible because of what Wall Street people call the eighth wonder of the world: compound interest. They don't teach you about stuff like this in school. And the only trade-off you make when investing in your youth is you don't get to spend your hard-earned money on liabilities. But once you see the magic of compound interest, you'll understand the advantage of starting early.
Well, if you have to closely follow a company, you shouldn't own it.
Getting literally glued to a screen, checking the price every hour, or in some extreme cases every few minutes to see if they made a profit. If you've got doubts about your investments, maybe you shouldn't have made them in the first place. Good investments don't require constant maintenance. They do the heavy lifting for you over extended periods of time. It's all about understanding the fundamentals, and that's precisely what Warren Buffett focuses on, and the reason why 80% of Berkshire Hathaway's portfolio is made up of only a handful of companies that they've been holding on to, in some cases, for decades. And if you're wondering why you might encounter this tendency in your investment behavior, well, there are two reasons. You're either playing the short-term game, which is a loser's game according to Buffett, or you're not ready emotionally and psychologically to hold your investment.
You don't want to get hung up on trying to make economic analysis because nobody's any good at it. You don't get rich doing that.
Now, you might be tempted to try and pick the bottom and the top to maximize your profits, but that signals only one thing: that you don't understand how things work from a macro perspective. The stock market is heavily influenced by what goes on in the global economy. Technology, politics, innovation, and supply chain issues all play a part, and the global economy is heavily influenced by things that we can't predict. This includes events like pandemics, wars, supply chain issues, and even ships getting stuck in canals. And only a fool will tell you that those things can be predicted entirely. The only way to pass calmly through the storm is to understand that eventually it will pass. Warren Buffett has lived to see 14 presidents, 7 wars, and all sorts of devastating macro events, and not even people like him who are seasoned investors can make such predictions. In his life, his bet was on one single thing: that through all of the events, the U.S. will be victorious, and as long as that remains true, his investments are going to be profitable. He understands that any attempt to predict such events and create an economic analysis based on that will only deviate from his long-term goals.
The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now.
Warren Buffett also advises not to get swayed by the daily ups and downs that media tends to emphasize. It's just noise. The media's job is to create sensational headlines to get you to click or tune in. They're not there to help you build wealth. The game is already hard. There's no reason to make it harder on yourself. As a matter of fact, you should make it as easy as possible, okay? Buffett doesn't try to beat the market or YOLO in a particular stock. He plays it super safe with index funds. He's investing in the overall market and taking advantage of his long-term upward trend. He's even gone on record stating that he's instructed the trustee of his estate to invest 90% of his wealth into an S&P 500 index fund when he's no longer around. He believes in the long-term prosperity of American businesses.